Recording progress.
Testing, 1, 2, 3. Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 183 for the 12th of May 2025. I hope you're all well. I hope you've had a good weekend. I hope you're ready for another interesting week ahead for us. As always, if you're here in the room for the live session, if you could just confirm that you can hear my voice and see the slides, or if you're on the YouTube live stream, then appreciate that. Would help me greatly. For those of you joining us for the first time, the Monday Market Update is literally just that. It is me flying through as much as I can fit in over the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then a look at the live markets. It's not a signal service. It's not a trade recommendation. It is merely just me sharing what I'm seeing in the markets, and I hope that is of some help and use to yourselves as well. As always, you are very welcome here, but just remember that you're always responsible for your own trading decisions. If you're looking for some help and support, the VTP Trader Accountability Group is up and running. We've been going now for a bit of about 6 weeks or so. A great way to basically help keep yourself accountable and sort of eliminate your bad habits and start to basically put in place the kind of right habits and best practices for to trade successfully in the future. As always, if you want some details, you can contact me or just use that QR code. And if you want some more education, this afternoon I will be doing the Monday Market Matters webinar for active trades. That at 2 o'clock London time. You can join on either the QR code there or through their website. Today I'll be talking about how to debrief your trading. And I'll be doing, as usual, the Wednesday evening Market Pulse weekly update for Admiral Markets at 7 o'clock London time. If you want to join, you're very welcome. Okay, let's have a look at the markets and what's this telling us. If you're new to trading or if you're new to joining us, maybe this might look a little intimidating, but it's not a great deal. It's just bits of the model that I use every weekend to help me identify where's the strength and where's the weakness, primarily in FX, but also in index markets, so that I'm in a position to effectively prioritize my time, energy, and resources for the week ahead. So what is this telling us here at the moment? I'll just bear with us. Let's get the old drawing tool up. So we are into week 20 of the year. Okay, week 20 of the year, and where's the strength and where's the weakness? Well, of course, I did this at the weekend. I normally do it on a kind of Saturday morning, but of course, the what we have got, of course, which we'll look at in a moment, is invariably we had the US-China trade talks over the weekend. That has had an impact on markets since last night and into this morning in terms of the appetite towards risk. But what we were looking at, okay, when I was doing the model here, okay, for the kind of like longer term, what we were seeing was that Swiss franc remained top of the pile. Sterling, okay, had worked its way back up, okay, into second of the pile, and we'll look at more of that later when we look at sterling itself. And invariably we had Aussie still at the bottom, but then also US dollar, okay, was in bottom of the pile. Of course, what we have seen is that from both sides, both the sort of US and China, have both been optimistic since they completed that sort of round of conversations, and there's been a real sort of rollback on some of those tariffs from what they were, and of course that has had a huge impact on markets this morning, and we'll look at that and what we can see here In terms of the one-day relative performance, okay, you can see that basically pretty much everything, in particular, Japanese yen, all right, has very weakened against the dollar. The dollar's strengthened against everybody, okay? So kind of it's a real element of of risk on, all right. So you can see the Swiss franc and Japanese yen the weakest, and just for a change as well, also just to confirm that because it had an impact on some of my trading this morning, was that invariably, in terms of the FX futures this morning's what we saw was okay. The Japanese yen, right, was down a great deal, as was the Swiss franc. Okay, so as you can see, pretty much everything was getting hammered against the dollar. All right, everything was pretty much very much strength with the dollar. And it meant for me, okay, in terms of this is just a snapshot of my own intraday playbook this morning. Okay, it was kind of a busier morning than I normally like on a Monday morning for intraday trading, but a lot of that was basically driven by that kind of news that came out. Okay, markets were pretty ecstatic about that. For me, for base, I didn't trade, even though I had signals okay for the Japanese yen. I didn't touch it because invariably. Because there was such a kind of risk on sort of juggernaut, all right, risk on juggernaut, and I wasn't going to particularly fight it based upon the setups that I get there. So it was a good morning overall, but it was a rather busier morning than I'm normally used to on a Monday morning. But we can see that risk on is is permeating against markets, and we will look at that in the live markets in a moment. When I was looking at the indices, for those of you remember, like just a week, well, not a week, about a month or so ago, sort of a month to 6 weeks ago, this, in terms of looking at all of the indexes, etc., was pretty much all across the red, but now it's quite the opposite. Okay, they are all in STAM 1 Bravo, STAM 2 Bravo, okay, tactical or strategic buy environments. There's an awful lot of green there now, okay, which we'll look at in a moment. Interestingly, oil had been, whilst it wasn't in an environment, okay, a STAM environment, it was a little bit bearish, but I think we'll see that that's probably changed considerably this morning, based upon the fact that everyone is at risk on. Gold will have drifted off, okay, because of as I said, because we're risk on, and Bitcoin. All right, Bitcoin, from looked at it about 6 weeks ago, the bounce off the 50 period moving average. That's moved nicely and has been trading up north of 100,000. Okay, so it's definitely everybody's risk on at the moment, or certainly for today. All right, everybody's risk on, and we've got quite a bit of data coming out this week. Okay, so I don't expect the data that we're looking at, certainly in terms of US data. So we've got CPI, okay, and a PPI this week, and a University of Michigan on Friday, and Powell speaking on Thursday, and retail sales. I personally don't see any of that data massively impacting the kind of, let's say, the risk on giddiness that will have come out of the back of those US-China trade talks. We do have some news for the UK. We've got jobs number first thing tomorrow morning. Then we've got basically GDP on Thursday, and that will be interesting to see whether there is any kind of whether there's any kind of uplift there. Those numbers could be a little bit volatile, certainly in the GDP, based upon everybody sort of having an impact, with those tariffs having an impact. But we'll have to wait and see. So as I said, Tuesday morning and Thursday morning for major UK numbers. So as I said, the major element is there's a little bit of risk on giddiness. That's where we are today after those weekend talks. Okay, let's have a little look at charts of interest. These are some things that are either they're occurring, or happening, or you can learn from, or you can add to your own particular watch list. This is Deutsche Bank, okay, and unusually, because normally I will have it on the weekly chart, but this is on the monthly chart here, okay, for Deutsche Bank. Now, I've been doing these kind of like market updates for about 5 years now, all right. And for those of you who've joined us from the start through them all, will know that I was not exactly the most how shall we say it, the most bullish or optimistic on Deutsche Bank for a good long time for many reasons. But a good trader has to basically trade what you see and change your view accordingly. and as you can see, for years, all right, for years, as I said, this is the monthly chart for years. Okay, Deutsche Bank, I think it peaked out around about 80 odd dollar-ish. This is the US listing. It peaked out around, I think, about 80 odd dollars. It might even be higher than that, but it just literally fallen to a sorry state here. Okay, and with the kind of COVID crash here, we were down around about $5. Okay, down about $5, and then we started to pull our way back up. Okay, and that was going okay, all right, until then we had the start of the war in Ukraine. But actually, as you can see, we had a sort of $10 was kind of like a pivot. All right, you can see there basically sort of resistance turning into support, support turning into resistance, support again. But then actually what we can see is that invariably, excuse my drawings, as I say, I'm a better trader than I'm an artist. Flag there, and as you can see, this year has been pretty good for Deutsche Bank. All right, it has pretty much accelerated from trading around $17. We're up there about 27. We'll be up a little bit in the pre there, okay, which is perhaps not as much as some of those US tech stocks will undoubtedly be up in the pre-market, but you can see for yourself on a monthly chart that is invariably that's particularly bullish. All right, and even with all of last month's shenanigans, you can see that big candle there, and we are still bullish on that. So you can find your own narrative and reasons for it. Ultimately, you have to trade what you see, and that is bullish. That has come from Stan Einstein's, sort of kind of his basically stage ones. His stage one, we are most definitely into a stage two. All right, stage two trend. So you might want to watch that and see if there's an opportunity to take part of that. Okay, so here's the next one. So we have quite a lot of earnings reports this week. Not the kind of biggest of names, but it's more about quantity than quality this week. Nonetheless, there are a few of the big names, and one of them on Thursday before the open is Walmart. All right, and that's what we're looking at here. This is the weekly chart of Walmart, and I think we looked about this a couple of months ago because it was in a nice trend, wasn't it? It was in a nice trend. We had basically got up towards the kind of $100 big run number, and you can see we kind of, we dropped away from that very, very strongly. Okay, there's a real sort of kind of, it's a scruffy evening star, I would have called those three candles there. Okay, but nonetheless, you can see we dropped away. And where did we drop away back to? We dropped away back to big round number at 80, and also the weekly 50-period moving average. Okay, so that's what you see on my charts: a blue 20, red 50, and sometimes a green 200. All right, but we dropped off the 50, and as you can see, we kind of worked our way back up from being around about $80 to just tick of $100 there. Okay, and as I said, we've got earnings on Thursday. You can see last week we kind of dropped a bit, but as I was just saying, if you look at from where we closed 96 from where pre-market is 99, that's an indication of kind of what's that almost sort of $2.50 jump in the pre-market. That is Walmart. Okay, is the reflection of how investors, traders are viewing the kind of optimism that come out of those particular talks. All right, and as I said, I bet those gaps are going to be even bigger on some of those US tech firms. But that is an indication. Of course, Walmart. Right, they're selling lots of stuff, lots of cheap Chinese stuff. I suspect it's a long time since I've been in a Walmart, but you can see for yourself. I wonder if that earnings and this risk on giddiness, whether that takes us back up above $100, and if we get above it, can we actually stay above it? That's what I'd be watching. That's why that'll be on my watch list at the moment. Okay, this is Disney, and this is also on the monthly chart here. Okay, it's on the monthly chart because I wanted to be able to sort of show what the price action was going on. So they had their earnings. I think it was last week. I've lost my track of my days this year. Basically, everything's been happening so much. But Disney, they had their numbers last week, and the numbers were better than expected. Okay, and this is under the let's say the kind of overall narrative and the overall story about Disney, which is why I've got the monthly chart up here. We can see if we look back, okay, for a good part of the time, $80, $120. And actually, for a good while, we were kind of knocking about in that particular region. Okay. We had a bit of a, the crash back down to 80 during that will have been during the start of the COVID lockdown. And then we rallied our way back up to $200, a real move from $80 to $200. But then really over the last sort of 3-4 years, what we have seen is a case of, let's say, a rather dispiriting narrative about Disney. A lot of it, sort of linked into its kind of some of its, let's say, some of its executives, some of its board hires, and some of it the direction of travel of the way it was, what it was operating. And we can see that from $200, we came back to $80, and then we kind of back into that range between around about $80 to $120. And sort of the last month, April, we came back down to $80. As I said, the number's pretty good, and actually we can swing. And so we can see last week, right, in the pre-market. Last week, we're $105, pre-market at 108. It would not surprise me, okay, for us to basically work our way back up to that 120 number. At least that would be my kind of my first target there. Okay, maybe touch 100, maybe test 100, and then basically go to 120. So that's why that's on my watch list at the moment. Okay, so this is a little bit different. All right, company 302132. Okay, what is this all about? Well, it's been a rather mixed week for India, I would suggest. Okay, of course, there was lots of fanfare in the UK over the last week or two about the UK-India trade deal, and you only need to scratch the surface of that to look at some of the details to get people upset about that. Also, India was hoping to basically to be the biggest beneficiary of the the tariffs on China, and with basically those tariffs being rolled back for another, I think it's 90 days. That means that India basically will have a little bit of a their luck is not in that sense. And talking of luck, as I said, this is 302132. This is a Chinese company, Avic Chengdu aircraft, who basically create the J-10 Dragon fighter aircraft, which is used by the Chinese Air Force and also the Pakistan Air Force. And for those of you who keep on top of geopolitics, or who keep, like me, have a bit of a background in defence and such, last week there was a little bit of an air battle there over Kashmir region between the Pakistan Air Force operating J-10s and the Indian Air Force operating, I think it was MiG-29 Su-30s, but also the French Dassault Rafale. What seems to have happened, and what seems to have been confirmed over the weekend, was that the Pakistan Air Force, using the J-10s, gave the Indian Air Force a little bit of a bloody nose and managed to shoot down a few of those French Rafales. And so that is why we have seen, this is the daily chart of the Avic Chengdu aircraft, is that this is why we have seen such a jump in their share price. Okay, so from Tuesday evening, okay, they closed around about it's around about sort of 58, 59 Chinese yuan. And as you can see, they sort of jumped on the Wednesday and traded up to 70. And then basically today we can see, as more of the details came out over the weekend, we can see that basically, they're trading up there about 95 yuan there, okay, over the course of the day. So you can see that, it's not, that is a huge jump, all right? That is a huge jump in just a matter of a few days. And it begs the question about, was that kind of air battle a little bit of a sign of the times, okay? A sign of a swing. Historically, Western defense companies have done a good job of basically selling, both, whether it be French, European, British, American defense equipment to other nations, okay, especially and invariably at the cost of, let's say, the Chinese military equipment, which was perhaps maybe not considered to be on the same level or the same par. But after last week, of course, that is changing, and hence why we're seeing that kind of jump in the share price there. So As I said, it's a bit of a mixed week for India, but as you can see, that invariably that's the sort of the jump in the share price there. Just on as I said, is it a case of we're seeing a kind of a change, okay, a shift in ideas and mentality, and that is also reflected on the next one. Because this is AM, which is the chart for Dassault Aviation, French defence company who also built the Rafales, okay, which were flown by the Indian Air Force. And depending upon which story you particularly choose to believe, they either one, two, or three of them are shot down by the Pakistans with their Chinese aircraft and Chinese missiles of PL-15. But this is the 30-minute chart, okay? This is the 30-minute chart of the last week because invariably, as you can see here, we were trading up at 332 euros. Then as the kind of news started to come out, and as also elements of the kind of meeting in Kiev over the weekend, we can see we've gone from $332 to $292, okay, over the course of a week. And certainly today that has accelerated as I said, more of that information came out over the weekend. I said this is a 30-minute chart, and as I said, I wonder if it is an indication of perhaps there might be a change in mentality. In the past, we have seen, let's say, Asian, Middle Eastern, African, South American countries, their air forces look to buy, whether it be brand new or second-hand Western defence equipment. I wonder how many of them now, rather than paying for expensive aircraft like be more tempted to do business with the Chinese and buy J10s or other variations. As I said, I'll be interested to see if this is if this is a bit of a pivot point for, let's say, defence for some of these companies. So, as I said, you can see that's quite something there on the Dassault Aviation. That's been really off. It's had a bit of a bad week, shall we say. All right. Okay. With that in mind, let us now switch across to the live markets and have a look at what's going on there. So just bear with me for and we'll switch across. Okay. So I'm hoping you can still hear me. I'm hoping you can see me. We might overrun today because there's lots to cover, lots to go on. All right, but let's bring this up. Okay. So this is an indices profile. So I've got Dow on the weekly, Nasdaq 500 on the weekly, Russell on the weekly, FTSE 100, Nikkei, the DAX, and oil. So yeah, as I said earlier, okay, oil, you can look at that. Oil's had a bit of a bump there, hasn't it? From trading down at 55, we're now up at 63. Okay, that's no surprise. Okay, if people are optimistic, well, then invariably they think there'll be more demand for oil. So that's had a nice little bump there. 60 is held. If we look at, from last week, okay, last week we've had a couple of strong weeks, and last week that's on the Dow, and that's on Nasdaq, and that's on S&P 500, and that was on the Russell. It was kind of like. It was like an indecision week, but also kind of, I'd say, a week of pressure. Everybody just took a bit of a pause because they were waiting to see, what was the outcome of these talks over the weekend. And you can already see here on the electronic contracts, okay, how we've traded to the start of. Okay, so I suspect the actual opening of the exchanges in about 90 minutes time, that shall be a rather bullish event. I would expect, bar other data in there. So that's all bullish, as I said. Risk on giddiness there. Kind of perhaps maybe the one that isn't is FTSE. Okay, FTSE's trying to work that all out, but even Nikkei. Okay, Nikkei there. Okay, started this week pushing through its 50 period moving average. Probably the one that is kind of interest is the DAX as well. So let's just. DAX has been quite some maneuver. I'm just going to draw this in here, okay? And the reason I'm just drawing in this particular level is what we can see is, from that double top, this is the weekly chart, that double top selling off to the 50, the 15,000, that was a great place to buy. And we can see how strongly we rallied. And then, we have already this week traded up through those highs of the year, highs again. The price action's a little bit interesting. We've gapped up, okay, a little bit of a hammer there forming, but let's wait and see on that. Let's see what happens. The 4-hour chart there, okay, we'll update through to it. The basically every man and his dog is on the internet there. Let's just wait for that whilst that works its way out. But as you can see, that has been quite some turnaround on the DAX from peaking with a double top, falling away, and falling away over 4,000 points, and then reclaiming them as well. That's quite some story, isn't it? That is quite some story that we're seeing on that. Looking at a couple of the others, so if we can have a look at, I don't want to touch Bitcoin very much, but I can't not, because we talked about this in the weekly chart. Nice double top. We talked about that shelf breaking, and I remember us talking about how would the 50 hold. The big conversation was last year. You see how the price bounced off the weekly, and as we said last couple of weeks ago, it bounced. It was bullish. But even I perhaps wasn't expecting it to be as bullish as it has been. As you can see, it's traded right back through the 100,000 level, trading way up there. And, you've got to be sort of expecting it to have an assault on the, so around just under 110,000. That's what we'd be looking for in Bitcoin. With that kind of risk on giddiness, we can see it there. But of course, that means risk on giddiness is kind of, is not following through in the same way on gold. Okay. This is gold in the weekly chart. A couple of weeks ago, we had real strong run, big hammer, big pin bar, and then last week we started off being very bullish, but that's a lower high at the moment there on the weekly chart. And if we go down to the daily chart, you can see for yourself, we were talking about that ledge. It dropped it, and I was expecting it to come back to the 50 then, 3,050, but bang! It's almost like the last push, the last test. We push up, but we couldn't create inside bar, couldn't get up. And as you can see in today, right, today has been a reflection. That's the 4-hour chart. We've gapped down and continued down, right? And that's an indication of, as I said, of that kind of risk on giddiness. That's what we're seeing there with gold. All right, so let's have a look at, we'll have a little look at dollar, and we'll have a quick look at sterling. As I said, I apologize, we'll probably overrun just a little bit today, but it's because there's just so much been going on. It's been absolutely it's been a very, very busy morning, shall we say. So hopefully when this pull up here, my internet's been very slow today as well. I'm working from home today. It's a case of, we want to just have a look at the dollar. I want to have a look at the as well. So what have I got here? This is my dollar profile. So I've got Aussie dollar on the 4-hour, Euro dollar on the 4-hour, pound dollar 4-hour, dollar Swiss on the 4-hour, Kiwi dollar 4-hour, dollar CAD on the 4-hour, dollar yen, and dollar index. We'll look at dollar index in a moment. But look at that. Aussie dollar 4-hour on the start, okay. Kiwi dollar 4-hour start of the week. Euro dollar gap down, 4-hour continue. Pound dollar gap down, okay, continue. Dollar against Swiss franc gap up, continue. Dollar yen gap up, continue. Dollar CAD gap down in the open, but it's just carried on now. Okay, that is just a very, very quick snapshot, okay, of that kind of dollar strength that we see there. And if we look at the dollar index itself, let's just go in. I talked about it last week about how I needed to see it closing back up above 100 to give me any kind of real confidence of a low there, which is what we actually did. There was a gap here, but you can see how we've started. All right, you can see how we've started this week. Okay, I was looking at the gap there from way back of those, let's say, the tariff tantrums. I wanted to see us getting above that to hold it. Well, that's what we're doing. So, for me, I look at that. We talked about this a couple of weeks ago. All right, inverse head and shoulders building. A little bit concerned here. There's kind of like descending wedge, but then bang, you can see that. And now for me, above 50, all right, if you're above 100, above the gap, above the daily 50, that's, I'd be maybe expecting us to come up there, and then if we get that continued dollar strength, that's what I'd be kind of looking at and viewing at. And that means if that dollar strength, remember at the weekend on Saturday, dollar was bottom of the STAM. I don't expect it to be bottom of the STAM by the end of this week. Okay, when the dollar gets on a tear, it literally is the big bully is stuff, and not much is going to stop it. So, as I said, there is quite a bit of data out this week, but whether the data can change that risk on giddiness remains to be seen there, ladies and gentlemen. Okay, so that's dollar, and oops, this was just from my trading this morning. Okay, so this is sterling. So I've got cable on the 4-hour, euro sterling on the 4-hour, pound Aussie on the 4-hour, pound CAD on the 4-hour, FTSE on the 4-hour, pound New Zealand, pound Swiss, pound yen on the 4 hour. So as I said, the pound, even though sterling has been in number 2, end of last week, we're starting to drift our way down. We kind of gapped down, came up, and then dollar strength on that. Okay. As I said, pound against yen. Okay, yen is the one that's as the risk on giddiness has run. What we have done is basically sterling, we gapped up there, okay, and we've continued up, and that's what I said. I had a couple of mean reversion signals on the intraday basis, but I didn't take them today simply because I knew we were in sort of risk on giddiness mode. That's where we were. If we look at pound against Canadian dollar from where we closed last week to where we opened, and we pushed up, but we didn't really fill that gap yet. But then we dropped its way down there, okay, and then perhaps that is basically that Canada's done well there because of the bump we just saw in oil prices. Pound against New Zealand dollar from ending last week. Okay, we gapped down and we've pound against New Zealand dollar. Nobody really cares. Pound against Aussie. We closed with a little bit of strength there, but then we gapped down in the open. We've pushed up once again. We've not been able to fill that gap before dropping down again. And as I said, that's the kind of risk on giddiness. Now, Aussie is in many ways used as a proxy. Seeing that kind of continue its way down there. We look at pound against Swiss franc here. Okay, so what we have seen is a general kind of even though Swiss franc was top of the STAM, we've seen that kind of risk on idea continue. All right, we'll continue that kind of. We talked about it a few weeks ago. That kind of tariff fatigue turning into a relief rally. And what we've seen this week is basically as a continued strength. And we're running into the daily 50, which is acting as resistance, but it's that kind of risk on. All right, Swiss franc getting sold off a bit, Japanese yen getting sold off a lot, and then euro sterling. Okay, of course, as dollar has strengthened, euro has weakened. So we're finished. We're finished here. Last week we've gapped down, we've tried to come up, we've filled it, but then basically you can see we've continued down, and that's that euro weakness off the back of dollar. So there you go, ladies and gentlemen. Let's draw it to a close. I apologise, we ran over a little bit, and I had to sort of cut through a fair few things because there's just an awful lot going on. But I'm hoping that's given you just a little bit of help and a little bit of insight into the markets today. As always, okay, I wish you the best of success in your trading endeavours. I hope you have a fabulous trading week. It's going to be an interesting one. As always, manage risk, trade well, everybody, and I'll speak to you soon. Many thanks.